Anything you heard from Steph that you agree or disagree with?
Yeah, I think I agree with Stephanie on this one about the economy overall and where Powell is probably thinking. I think he's been focused on that core CPI number this entire time. He's made it very clear that core CPI, things like owner equivalent rents, since the very beginning were the thing that really was going to move the number and make the decision for him. And so I think I'm probably a little bit more committed to a raise actually in September than Stephanie sounds like she is. But I think we're thinking similarly in the sense that the Fed is not done. Whether it's a pause in September and then we hear something else in November, or we hear a raise in September and another raise in November, depending on how aggressive they decide to be. Either way, the Fed's work is not done here. This last couple pounds that the Fed is trying to shed of inflation out of the economy is going to be the hardest and the stickiest. And so that's where being willing to stay disciplined and stick with it is really going to matter.
Yeah, I agree. I mean, unless the Federal Reserve somehow knows how to bring down rents or give people pay cuts, I don't see how they're going to impact wages or shelter. But from a market perspective, from an investing perspective, do we care if the Fed raises once or twice more, or if they just stay here, because it has been one of the fastest and most aggressive tightening cycles in American history already?
Well, I think we do, simply because the whole reason the Fed wants to control short-term rates is to make you and I feel a little bit less prosperous, so that we're willing to spend a little bit less, right? So you make it more expensive for me to upgrade to that next house. It makes me feel a little bit less prosperous. I can't go get the next Tesla to feel a little bit more prosperous compared to my neighbors whose cars are also in the driveway. And so from a sentiment perspective, that additional couple percentage points of interest hikes will actually make a difference psychologically, and that's ultimately what the Fed is after anyway. They just want to convince us to stop spending money, which I think is actually already happening. We'll probably find out a little bit of that with Home Depot's numbers you guys were talking about and some of the other retailers who are about to report. I think the consumer's tapped out, and we're about to find out just how close we are to the end of that rope.
Your take on all things we just talked about, or throw something new into the mix. Why not? It's Friday. Let's have some fun.
Hey, Brian, thanks so much for having me. I do think that it does have a big impact in the market. When you look at, the expectations for Fed rate cuts in 2024, there's a probability of a cut, I think, in as early as March or April of 2024. And I think that needs to get priced out of the market. I think the Fed will really want to hone in on the fact that they are going to keep rates higher for longer. And it really needs to get priced out of the market. And that's going to, impact yields, which will then impact valuations on the equity side.
How do we make money right now, Aya? We've had a pretty good year. Dow, S&P's up 17%. NASDAQ's, I think, up, or the NASDAQ 100, I think, is up about 41%. How do we make money from here on out, Aya?
Sure. So, I think there's multiple ways. Fixed income is still pretty attractive with really good yields. So, take advantage of the great run in equities, take some off the table, and maybe, lock in some of those yields. And then secondly, from just an individual stock perspective, we think you can take some profits in some of these great tech names, not get out of them. You want to stay in them for the long term. But, find the opportunities, find the Home Depots, the UPSs. We like CVS for the same reason. CVS
you just throw those names out randomly, UPS and Home. That didn't sound like an accident.
There's $5 trillion on the sidelines, right? So
what sidelines? Who are these sidelines I keep hearing? What?
In cash.
Raiders sideline?
Yes.
What are we talking about?
You can be in cash because you're getting something on that cash now, but it's on the sidelines. Sentiment to me seems really still offsides in terms of negativity.
But don't you want some? You want to have some cash allocation. I don't ever want to have no cash anywhere.
You're right. No, there are alternatives now that we haven't seen in the last 10 years.
5.5% for a tax-free government CD for 1 year. It's not bad. I'm a financial coward. That's pretty nice. If
inflation stays at 4-5%, 3-4-5%, that's not great. So long-term average for the S&P 500, total return is 7%. 7%. So we've had a nice run this year. I'm not saying it can't continue. I think we chop around, personally, for the next couple of months. But I think then people are going to chase into the end of the year for sure. But I do think that there's money on the sidelines. There's people that are not believing. I think the economy is held in much more than people have been expecting. Earnings have held in. Maybe we're troughing in earnings, right? Companies have done a great job in terms of margin. So I have ideas. It's not like, it's not the high flyer of technology companies. It is maybe boring to talk about UPS or to talk about Home Depot.
Making money is not boring.
But by the way, Fortinet on last Friday fell 25% for a company that's going to grow total revenues of 20%, margin expansion of 100 basis points per year, free cash flow growth of 20%. So I can find names out there to buy. Maybe I don't want to buy the whole index, but I can find pockets. And I love the fact that we're broadening out.